Good morning, everyone. And I'm Doc McGraw, Options Gelt, and welcome to my daily plan where we talk about all things SPX, volatility, markets, some individual names, and zero DTE trading, scalping, and longer time frame as well, giving you like the broad roadmap of the market and market structure. And so here we are today. There's an old saying, may you live in interesting times. And I think that's kind of what we're living through now. So I just happen to be starting off on my volatility dashboard. And so I'm going to start here, then I'm going to kind of go back to my standard presentation where I kind of go over what some of the levels are today, a little bit about what happened yesterday, and most importantly, what we expect going forward. You know what they say, the past is history and tomorrow's a mystery. But what we have is right now and what's going to happen right here, right now. So here we are. I'm looking at the volatility dashboard. And why am I looking at the volatility dashboard, you might ask? Okay. First thing I'm looking at now, and I've been talking about this kind of regularly, is the VIX versus the VIX futures. The VIX is supposed to be, quote unquote, below the VIX futures price. Why is that? The VIX future is a future. So you're paying extra for the time, just like you pay for an option. There's time premium. Here, the VIX is over the VIX future. It's backwardated. So somebody is wrong, quote unquote. But at the settlement, the VIX and this are going to be equal. This is going to get paid out based on where this is. And I'm saying that VIX is wrong. Now, that doesn't mean that the VIX futures can't go up. They were up at 23 yesterday. When they were up at 23 yesterday, the VIX was at 25 or whatever. So just put that in the back of your mind. That's why I'm looking at this. And today we have a VIX expiration, a VIX expiration, a small one. It's a weekly, it's small, but there's been some interest in it because of what's going on. When I looked yesterday, and I did it here on live on YouTube, 22 looked like the main number. And so I'm going to suppose that's where we're going to settle in. I didn't look closely, and then we'll see what happens from there. So in the morning, the VIX is kind of wonky anyway. And lately, what we've been seeing is VIX opening up high and then coming in to at least try to meet the VX futures. So we've opened low and then been bouncing up as VIX starts to normalize the relationship. If you have questions, please ask. I know there's lots of moving parts here. Okay, along with that, I always like to look at the VIX 9-day. Why the VIX 9-day? That's the easiest proxy I have for a quick glance to see what's going on in the short-term fear. And if you're trading short-term options like me or short-term futures, whatever, if you're scalping, what's going on right here today now, and the volatility is going to be more controlling or more important to know. And what we've been seeing is the VIX 9-day higher than the VIX. The VIX was 28-ish yesterday, and the VIX 9-day topped out at 30. So that's backwardation. You should be paying more for the uncertainty of time. Here, the uncertainty or the fear is short-term. Longer-term things are going to be stabilizing out. And we've been seeing the VIX 9-day exceeding the VIX for a while now, since February, really. For a while, it was NVIDIA earnings, and we knew that this was going to go on. The Iran thing was Iran uncertainty, then it happened. And so this week we have non-farm payroll Friday, as well as Iran. And so Not expecting to see VIX relax very much from here, but still, it's not the absolute level of VIX, 22 or 20 or 23 or whatever. It's the relative level of VIX to itself, mean reverting. If VIX goes up, then market maker hedging for the downside has to increase and we go down more. If VIX goes down from 25 to 23, well, 23 would have been bad if we were 21, but it's good coming from there, and market maker unwind their short hedges. Oversimplification, but we're going to go with that. Okay, now that we got that out of the way, let's take a quick look at the chart because yesterday was a very interesting day. Just a real quick recap of yesterday. And let's bring it back to the day before. So when was it? Monday, we ended up bouncing after the overnight reaction to the war, to the conflict, excuse me. It's not a war, it's a conflict. To the conflict in Iran. And we topped out close to 6,900 and closed 6,880, well, closed 6,875. It's a round number, easy reference point. And let me do it this way so you can see where the breaks are. So we closed out over here on Monday. And then last night, Tuesday, right, not last night, the night before, Monday night, Tuesday, VIX went nuts. We dropped in the overnight session. We opened at 6,800. So we gapped down, gap fill people, pay attention. We gapped down from 6880, 75, 6880 technically, gapped down to 6,800 and straight down to 6710. We had a lot of puts at 6,700. And once we stalled here and VIX came in, then all that hedging of all those puts had to be unwind. VIX started to come in a little bit, to normalize a little bit, and all that hedging unwound, and we kind of went right back up through the levels, closed above the open, but still closed negative. We went all the way up to 6840 yesterday. And then now here we are in the middle. So here we are, 6840 again, basically near yesterday's high. Now I wrote my daily plan based on where we were in the morning, so the zones are gonna be shifting up and down. But it's giving you basically the zones. Okay, and if you are interested in getting my daily plan with the detailed roadmap, that's a premium service as well as a Discord server where we screen share and we kind of talk about expectations and trade setups, whatever. Click the link to subscribe. And I believe there's a free trial through WHOP in there, and we can direct you to that if you can't find it. And while I'm doing my public service announcement before we get to the daily plan, the mentorship program, the accelerator course, the beta, is just about full. We may have 1 or 2 spots, I'm not sure. Sign up. There'll be a wait list either for the next beta or if people drop out or whatever. So either way, sign up for the wait list, and schedule and all that will be coming out in a day or so, firming things up. Thank you. Thank you everybody for subscribing. But you trade whatever you want. You trade SPX, you trade SPY, you trade Q, you trade Apple, you trade whatever you want. I'm not sure what I personally trade SPX and E-mini and SPY and XSP and some individual names sometime.
I'm really good at trading my happiness for money and time.
I'm not. You can have the money. I'll take the happiness. You know what they say? Money doesn't buy happiness. However, it makes misery a lot more comfortable.
It's true.
Okay. All right. So here's my cute little narrative. Tuesday delivered the ugliest tape we've seen in a while with SPX and QQQ. We're hammered. The headline, drip, drip, drip headlines. Algos reacting to every little silly headline. We gap down. Here's what I said: 6,800 against that close near 6,875. So session low 67.10. So from the Monday's close, we went down about 2.5 points. We bounced about 2.5%. We bounced about 1.5% and change, right near that 3-month. We broke the 3-month consolidation range. We've been consolidating basically between 6,800, really a little less, 6,780, wherever the lows were, and 7,000, we'll call it, for 3 months. So we broke that consolidation range. So if you're a TA person and you're a bear, you might be getting excited. But then we reclaimed back into it. So maybe there's no party. I don't know. We tagged almost 67, which was by the prior all-time high in September. So we kind of came all the way back to September highs, and then we came back to that 6,800. Another thing that's important, according to some, perhaps more importantly, we undercut 69.20, December low. What O.G. McMillan, Larry McMillan, the author of what I call the Options Traders Bible, calls this critical, I understand. And he's got all kinds of studies about it. Historically, early year breaks of the December low can lead to swift declines. But we undercut it intraday and then reclaimed it. I actually texted him and asked him how he interprets that. We'll see what he says. He's been pretty good about answering my stuff. The recovery itself was dramatic, V, 105 points, etc. Okay, so I'm assuming most of you were there and lived through it and saying, where are we going? And so here we are. So, and basically today we've kind of staying in the same zone that we were in. All right, we already talked about the VIX. The VIX 9-day, more dramatic, outperformed. Market expects more turbulence ahead. Until the term structure normalizes, we should expect, violent two-way action. Okay, we know that. Okay, so today we had ADP at 8:15. We have some events. We have PMI, ISM. So expect wiggles. We had CrowdStrike last night. It was down a little bit in the aftermarket, and it was up a little bit before the open. I'm flagging that as important because we know that the SaaS, and the software sector in general, has been beaten up or had been beaten up and decimated on the whole. AI is going to devour it. They planted a Chicago. That was an old song from the 60s. That it's going to be. Do I trade gold? No, I don't trade gold. Every time I trade gold, I lose money. I lost my train of thought. Where was I? Doesn't matter. I'll pick up where I was. Right. ITV. And we've been getting negative reactions to software stocks, even when their earnings were good. And so now that we're getting a positive reaction, IGV was green yesterday. That's the software ETF that I trade. So yeah. CrowdStrike beat. Okay, let's go to levels and lines. Yesterday's range, 67.10 to 68.40. Clearly, you have to mark those on your charts or mentally mark them. 6,800, the round number. Now I'm going to switch gears. I'm going to pull up options depth, which is what I like to use for getting gamma levels. There are a number of gamma providers out there. I use many of them. I use Spot Gamma, I use Gamma Edge, Gamma Labs, Usual Whales. I synthesize all of them, but it's easiest for me to show this option depth as my preferred. And the first thing that we see here, we see a few things. I want you to get used to it. If you want to learn more about how to look at this, sign up for the mentorship program or join my premium service, because we talk about this all the time. There's learning educational section in the server, and I'm always available to talk about this stuff, and so are senior members. But the first thing you should notice, 500 contracts, this is thin. You know, the market opens and algos come in, buy 1,000 or two, or sell 1,000 or two. And so a lot of this stuff will get eaten up, especially near the money. So we're, say, 68.40 or 50 now. An algo comes in and buys 1,000, 68.75 calls. Suddenly we have a pull up toward that. If a customer buys it, the market maker is short that, they sell it to them. And to hedge that, they have to buy the futures. Then as we get up toward that, they have to buy more. But then as we stall, then they sell them. So those ends up being magnets and stall zones. And to the right are where people sell options, where the opposite happens. As we approach, they sell, but then as we move away, they have to buy back, flattening their deltas. It's all about delta, flattening their delta exposure. And so what we see, broad brushstroke, 67.75 and 67.655, those are big, strong, solid levels that this doesn't look right. Hold on. Is that right? Yeah, no, that's right. Okay. That we shouldn't go through, 67.60, 67.75. This whole zone here, pretty much between 67, this whole zone, let's say 70 to 90 on top, between stalling out when we get up here and the reaction to this, we should kind of stall out. And then should we break down and be below this area here, all the way down to 68.15 where we close, and actually all the way down to 6,800, it's just choppy. There's no predictability here. Don't torture the data. It can kind of go anywhere, so we're just picking levels where there's thin spots that we could trade through. And this map just depicts it. Where it's red, it's market makers are short gamma, where basically expect wide range moves in both directions. And, you know, what we could say pretty definitively is that we're not going to go past 69.10-ish, not with 100% certainty, but with a high degree of certainty. I'm willing to go out on a limb and say we're not going below the 6,800-ish, 6,770 area. And anything else in between is fair game. And here where you see the yellow line, that's kind of one path of least resistance. Otherwise in here, it's just Chop City. I'll give a little more granular view later. And again, like I said, the more detailed version, the more detailed version is, let's talk about this while we're at VIX term structure, backwardation. Short term is higher than the long term, than the longer term. Doesn't really normalize until June. That's not supposed to happen, quote unquote. Historically, when we are in periods of backwardation, especially like the extremes we saw recently, uh, especially the extremes we saw recently, we get outsized, we get large returns 5 days and I think 30 days or whatever it is in the future. So maybe not today, and maybe not with a war going on, becomes a little trickier, but just keep that in mind. This will correct itself. Okay, options mechanics question. Let me see. You guys usually hold your position up to expiration. You manage them, close them. I close them at a percent profit. Especially my premium sell, either one. If I'm a premium seller, probably my main trade. My default is 65% credit received by the close. And I will rarely let it go to 70%. I don't care if it's 5 million points out of the money, I'm closing it. That's just me. For the 1 or 2 times that I say, I wish I had, it's not worth it. I'm capturing the premium. I ask myself, well, would I leave this trade on now for 15 cents for 5 hours or for 10 cents? The answer is no. It's not worth it. Time and trade, capital at risk. It's not worth it. So that's what I do. Sometimes 50%. My flies, I tend to not hold till expiration. Usually I get out at a profit no matter what. Yesterday was an example where I had a fly centered at 15 or 5 wide that cost me 20 cents. I had a few of them. I sold it for 75 cents. I put in automatic 75 cents, sell to close. I tripled my money, great. Had I left it, it would have been like $4. Would have been a huge win. Now, granted, I was away from the desk for the last hour, so I just put something in arbitrarily. But yeah, so I hope that answers your question. So, and so here we are. Also, gamma risk increases as time gets closer to expiration. I'm happy. Time and trade is one of the things I like to look at. Time and trade, if my TIT is whatever, 2 hours, 3 hours, I'm thrilled. I can mess around and look for other trades, scalp, whatever. Okay, our vol trader is back. Let me get my stuff off the screen. So yeah, I'm just showing you that we're in backwardation here. And Chewy, are you ready to go?
Yep, I'm ready.
Okay.
All right. Range today, guys, finally a smaller range for me. I'm looking at 68.45 down to 67.92 as my range. This is the ADP news that came out above expectations. I'd like us to reject my zone this morning, back down to pivot, maybe even down to floor for an upside move. My real target is pretty aggressive at 6,900 today. I do think we get there. I do think we have some room to the upside today. I know everyone's kind of looking for some downside, and I'm excited for that when it comes. I just am not so clear on it today. That's kind of the first trade I'm looking for something like that. If we can hold above the reject zone, I'm going to try and catch some momentum up to the upside and then maybe take a reject back down into the range. Should we not hold this bounce zone at open? No big deal. Nice little target at 67.45, which I'm pretty sure we test. Should we not hold the floor? A little bit of a range trade, a situation that I think we have today. Hopefully the news that happened this morning gives us enough of a catalyst to give us a kind of a range exit day. I am looking very cautiously at 10:30 for that oil inventory news. I think it'll be pretty significant today, just given the conflict that we're seeing.
Yeah, that's a good point. Wow. So you're saying if we break, what's your level? What's your like, oh crap level? If we break, then we go down?
92. 792.
Okay, so I see 67.92. So that's 67.70, roughly 75, which corresponds to where we have some positive gamma, where we're supposed to storm the gamma world.
Yeah.
So if that breaks, you're basically targeting near yesterday's low somewhere.
Correct. I think 67.80 as of right now looks like a good floor on the SPX. So you know, based on the positioning now, obviously anything can change, but based on the positioning now, I'm a little bit more bullish than bearish. And I lost my train of thought. It'll come back to me, but yeah, looking to see what the oil says. Oh, I remember we held 6,700. So, I mean, if we're gonna hold that and not break below, I still think we're in a buy the dip regime until I'm proven otherwise.
Okay. Let me comment on that. Yes, it's a closing break according to his system. However, he tweeted that out, and on his Substack, he was kind of bearish. He was like, oh, we broke 67.20, whatever. Now, yes, we closed above it, and yes, his system says we need to close below that break. And so I just DM'd him, making sure that he's not changing his mind, so to speak. But yes, according to his system, we broke it. We didn't close below it, so it doesn't really matter. Old school closing price is what matters. Closing price is the real price. The rest is noise, so to speak. But yes, what you say is correct. So just to reference some of the levels that Chewy spoke about. So that level he was talking about breaking is right around here where we have this positive gamma node, and his top level is 6,900. We have 1,200 calls that customers own at 6,900. If we get on a horse a little bit and volatility comes in, it's not that crazy that we get there. Things are thin. And like he said, everybody's bared up. Sometimes the market does funny things. I'm thinking more of finally a consolidation day, finally a day where we stay within the expected move, which is about 50, 55 points. So maybe a day where we, you know, if we're red, a little red, 6,800, but probably not. If we're green, 68.70 to 85 range has been arranged last few weeks on like Thursday, Friday. Whenever we broke down, a couple times we broke down to 67.80, and then we kind of crawled our way back to 68.35, and we kind of had a few days of consolidating there. And then 67, 68, 75, 85 tended to be where we ended up getting stuck and either went back up those few days where we reclaimed 6,900 or turned around back down. So just muscle memory, I'm thinking that that's going to be a toppy area. That's more on a TA point of view, because there's really nothing in the gamma world to support that other than this. And vol trader, let me add vol trader to the stage. Okay. One last thing to look at. Let's just take a quick look at depth view. And here I can see the positioning at different expiries. I just want to see what's around, what's in the neighborhood for tomorrow and Friday. Because some of these sold calls or positive gamma 68, 75, 70. This will make this area a little stickier. This will make this 68.50 more of an attractant. Now it'll be much more influential on Friday, but still gonna bleed into the hedging. 6,800. This is going to bleed into that. It's going to kind of negate some of the support there. 67.75. We have a battle between market makers short here versus long here. This should win the battle mathematically. Here we have what almost looks like a calendar. Looks like this was sold and this was bought. I don't know if it was, but we have sold here, bought here. Interesting, eh? At 67.75, that adds weight to the importance of that area. And 6,700, you know, they're placing their bets there. You got the lottery tickets there. You got lottery tickets at 6,700. You've had these large sold positions here for Friday that have been here for a while. 66.50. And so that's kind of what we got going on to the top side. 69.10, 69.50 was sold today. These were sold yesterday. These same sellers here will be selling somewhere up here today. The 100 wide gang, we call them, and they kind of march up and down really wide, collecting 10, 15 cents on 100 wide, probably calculated to give like an 8 or 10% return to their subscribers. They rarely lose. They close quick. Yeah, I totally agree, Selena. One of our very active and very pleased to note how she diligently is applying what she learns and is upping her game and helping others up their game. I really appreciate you, Selena. Okay, Vol Trader, you're up. You got something? You have a screen share for us?
Hey, good morning. No, I'm actually driving. I just want a quick share here regarding the market. If I remember correctly from what I did very early in the morning, I see upside max 68.60, 68.70 on SPX. That will be the max for the day in my eyes, and we'll get heavy selling there. So if we pop at the open or before the open into 68.50, 60, something like that, we probably get a dump following that. But either way, if we don't, and we go down at the open and we climb all day, I don't see the market going through that 68, 60, 70 to the upside. To the downside, strong bullishness if we hold the 68, 67, 80. As long as we don't break that, the market will reclaim 6,800 and we'll try and redo the 68.50. If we break the 67.80, we go down to 67.50 or so, and we don't really recover from there. And 6,800 becomes a strong resistance. But I think the market will strive to pop up, but we'll get heavy selling around those levels I mentioned to the upside. Now, only one more thing. I don't have charts at hand, but if you open TradingView, SPX, like the real SPX, CBOE, and you move to a weekly chart, we will witness
weekly chart.
Yeah.
Hold on, I'm going to pull up a weekly chart. Hold on. Go ahead, keep talking.
Yeah. So actually, instead of the CBOE SPX, look for SPX from a supplier called SpreadX.
Yeah, that's what I have. I have SpreadX up.
Okay. If you move to the weekly chart and add a basic volatility gauge like Bollinger Band, we will see the lowest ever volatility on the weekly chart, which means we're about to hit World War III or something. The 3 standard deviation on a Bollinger Band 20 days, 20 weeks, that spread between those +3, -3. Again, the inputs are weekly SPX, Bollinger Band 20 bars with
That's
3
what
standard
I have that
deviations.
up right here. Well, I have not
Right.
Bollinger Band. I have a different measure of
So
disclosure, but same
the
thing.
small if you subtract the upper band from the lower band and divide it by the SPX close on the weekly chart, you'll get something like 7. And that 7 is the lowest we ever saw, I think, the last 15 years. So we are consolidating. Like if I think they have an indicator called Bollinger Band width, not
Right,
percent, but
uh-huh.
width.
Okay.
So, and then you can see it more easily. It shows the width of the bands divided by the SPX spot, just to measure a general measure of volatility. And you'll see you need to go back like 10, 12 years back to find that.
I see it.
That is very, very low. So this means we're building a real strong coil that will unfold maybe March, maybe April. But this thing is going to dominate, the chatter. Soon enough, spot gamma will pick up on it and others. And this will continue to coil until it will erupt either up or down, generating a huge move. And I think we should start monitoring that, check base on that every week to make sure that we are abreast on that
I'm putting it in the
dynamic.
Discord right now. This is now going to become part of the weekly analysis. Thank you.
And that's pretty much it. I might also get disconnected because the reception here is shit.
Okay. And thanks for pointing it out. And although it might be counterintuitive to some of us that trade every day, multiple times a day, scalpers or zero DTE traders, or even if we trade swing trades, say a few days a weekly, it seems like, what are you talking about? We're up 100 points, down 100 points, but within that same range. Suddenly on a weekly, it doesn't look like much. Like if you're the person that checks a statement every month, oh, we haven't gone anywhere. If you checked your statement in December and now it's March, okay, you're going to check it again. Okay, so nothing happened. If you're allocated in SPY and bonds or something, some like very vanilla allocation. So it's an interesting point. And you just now gave me one more thing to put on my radar that I will then talk about it. Oh, Bernie Schaefer, wow, blast from the past. Is he still around? I used to get Schaefer's option service. Jesus, when was it? The year 2000, maybe even in the late 90s?
Who's this? Schaefer's Research. He's still around, yeah.
Still around? Wow. Bernie
Yeah, I
Schaefer.
follow him on X. Back in the days, 20 years or so back, 18 years, he was the only one.
Yeah.
There was Schaefer Research and iVolatility. That was the only 2 sources that dealt specifically on volatility, gamma squeezes, delta shorts, and all that. Actually, he evolved. He's not posting his own thing, but the firm continues. They're pretty active. I think they have like 30 posts a day on the X, and they point out.
Send me a link to their X. I'll follow them. Wow, Schaefer's still around. That's so cool.
Yeah. Now, just to give specific reference to that volatility thing on the weekly for your audience. So the band's width is about 490 points. So if you divide 490 to the SPX current spot, you'll get a value of 7. What is it? Like 7%, I think. And that will be the lowest one you'll find looking back all the way to probably 2017, 2015, something like that. So pretty wild. This can build for a long time, yeah. But the move will be huge. huge in terms of, 25, 30%. So the next time we go back to, something like VIX 12, which we'll probably reach eventually, that will be a good timing to start building a 6 months out volatility trade. And obviously not on the VIX. No, God forbid, no. But on whatever expiry will be available.
I will
on
do it on the
SPX.
VIX. You know, I like to trade the VIX, but that's a whole nother conversation.
Yeah. So, anyways, that's pretty much what I have today.
Okay, thank you for that. And OG McMillan, as well as others, are saying the same thing. We keep hitting that 6,700 and not breaking out, but if we do, there's a pretty big extension to the upside. Similarly, if we break that 6720 December low area, we have a pretty big move potentially to the downside. So yeah, what I'm showing you here, this comes every Friday. It's the expected move. It's an indicator I got from Theo Trade. It was on their website. Basically, I mean, it's no magic. Just takes the expected move and puts it on a chart, so it's not magic. And as you see, here was the expected move based on last Friday's open to this coming Friday. And we undercut the expected move, and look at that, we're back above it. 6750 was the expected move range low, 7,000 was the expected move range high. Sell line contours above it and below it, and see you next week. You go far enough away, and it's crazy how this trade works. Or structure flies around it. There's a lot you could do with it. And we undercut it and reclaimed it. Now, do we break it sometime? Sure. When was this? The November sell-off, whatever, we broke it. We closed above it or below it a few times. Yeah, I think I have it in the Discord. If not, I'll find a way to get it to you. I'll figure it out. Just remind me. Maybe, yeah, I'm not sure how to do that. Let me try. Let me see what happens. Control V. There you go. There you go, Barrett. I don't mind. Now, understand that this is one panel of a 6-panel. The other 5 panels are basically garbage. It's stuff that I used to use 2016, 17 when I got this indicator. But being a bit of a technophobe, I got this working the way I wanted on this one panel of the 6-panel, and that's all I need to know. I don't care about the other panels. I don't want to rebuild it. I built this once upon a time. That's good enough for me. So just so you know, there's going to be noise and garbage in there, and what you're looking for is this one right here. Theo, I call it no writing because the default one has so much writing and labels and all that you can't even read it. And you can play with, the you can play with the settings, labels, with all this kind of stuff, rows, the way the default comes out so crazy. And I like to have implied, historic and implied vol down here. And here we see finally implied is back above historic. We had those crazy days. This is starting to normalize a little bit. I'm old school 20-50 day moving average guy, and we're still. So my first target is the 20 day is now below the 50 day. We want to see in general 20 above the 50 for a bull trend. We haven't crossed below it in quite a while. We're gonna have to go back to. we'd have to go back to, see, when was this? In December, when we had some weakness, we almost broke that, but we didn't. We have to go back to April to find a break. So is this the beginning of, oh my God, catalyst being Iran? Or is this just draw your lines with a crayon, not with a fine tooth, and these lines converge, and then we kind of keep moving. And this is consistent logically with what we were talking about here with the Bollinger Bands. Logically, this is consistent with the same thing. I'm trying to remember. I think it works for all. Try it and let me know. I'm pretty sure it does. Because it's just measuring the expected move. It has to be on a daily chart. It's a pretty useful indicator. It's handy. It's not, what's the word I'm saying? It's not going to be ironclad, but it's another reference point that I use in combination with other reference points, gamma levels, standard technical analysis stuff, daily expected moves, etc. Multi-time frame synthesis of the interconnectivity of everything else. Of course, you have to look at VIX, you have to look at dollar, you have to look at everything and come up with your gestalt, so to speak, a holistic view. Oh yeah, this is why I pulled this up for before. So what do I have here in the VIX? Okay, here's my April VIX already. Everybody have an April VIX fly on just for fun. I closed out my March VIX the other day. This is just one, basically almost as a teaching tool. Not almost as a teaching tool. But what I wanted to look at real quick, what's the expected move now? Because I'm sure it's been moving around. Easiest way to see it is 43 points. Let's call it 45 for government work. Call it 40 to 50 if you want to, depending on how tight you want to do it. So 40 to 50 points from here, priced in the train, takes us right to that stall that I have near 75 on the top. This was the EM top in the morning when volatility was a little higher, expected move top. And the bottom takes us near 6,800-ish downside trigger. So everything is still consistent, so to speak. You don't need to do anything. It changes by itself every Friday. Friday morning at the open, suddenly there'll be a new set of lines. So you'll be seeing this, you'll be seeing this, you'll be seeing this. Thursday night, you'll be seeing this. Friday before the open, you'll be seeing this. And suddenly Friday at 9:31, whatever, you'll see another set of lines. Yes, it is nice. It is nice. I love it. It's a good toy, and and seriously, I mean, on Friday, I sold maybe 5 in the morning, 5 later in the day, and then I used it a few times during the week. But, I was able to sell down 66, somewhere down here, and somewhere up around 70, 50, wherever it was. We have a 15 wide, 20 wide spreads and get like 90 cents each, 110, 85 cents each, 65% buy to close or 50% buy to close on another set that I sell closer, and whoop, they're gone. Yes, it's been a long time. Once in a while, we might breach it and then come and then reclaim it, but closing outside of it is rare, especially with vol this elevated. And in my notes today, I checked the expected move for Friday, next Friday, and OPEX. I'll probably be doing a write-up over the weekend and trying to forecast, looking at them, because we have a big monthly OPEX. We have a big monthly OPEX for the Q1 OPEX. And usually like the COVID bear market ended in March, the SIVB collapse sell-off, March OPEX had ended. So usually if we get the sell-off, we get it here, although last year we got it in April. March was enough to contain us. Then April was thin, and that's when we fell apart. So yeah. Do we get credit spread signal? You don't get a signal from this chart. In the Discord, I put my trades in occasional purposes, not trading advice, and people can do what they want with them. If that answers your question in a roundabout way. So it's not a signal service. I put my trades in, other people put their trades in, and I talk about how I manage them. Yeah, on the Discord, yes. Yes, on the Discord. Yes, there's a little alert channel. Okay, so that's it. At 9:22, I've been, in theory, ending at 9 o'clock. Apparently I've fallen short. Everybody's abandoned me here. So again, thank you all for attending my daily plan. The indicator for TradingView, yes, that's also in the, the subscribers get all that. The indicator and the string comes out every day, and that goes, and that's in the Discord, etc. Thank you, you too, Gabriel, and like, subscribe, and retweet or repost this stuff. Apparently that helps. So if you're on Twitter, again, I see a lot more YouTubers than Twitterers, for whatever reason. You're welcome. You're welcome, Anya. And I'm signing off now. Hold on. Okay, I guess that's it. Well, I'm just playing here. Okay, take care.